Good morning. It's Harvey Jackson with Producer Profit. Just going to go through some of the top news items. Australian crop report I'll show in a bit, and then palm oil highs that we're seeing. And let's just have a quick look. There's conflicting information here. One is saying it's just following other oils, and then another article right on the following that one is saying that there's a decline in production, and then this one is actually a increased buying pace. Quoting India purchasing at a higher pace this month versus last because of their Diwali and Desera festivals that's going on, and there's a soy oil imports that's increasing as well. So other oils are actually getting pressured as well on the purchases into India. But then there's a caveat down here highlighted in green that December could fall as the prices have increased and put it a little bit out of reach for some of the Indian consumers. Central banks uh, with relative to the U.S. There's other banks like Canada, Sweden, New Zealand, all decreasing rates where the U.S. has not, and that's putting a little bit of pressure on the U.S. dollar, holding a lot of strength over others because it's just going to have higher interest return if somebody wants to park their money. And this is really just telling the same story, but it's actually keeps on hammering at a fairly high rate and continuing to do so. Rupee drops because of the pressure that you got from the U.S. dollar, and there's also some problems going on there as well as far as just their country is needing a little bit more stimulus to keep growing as well. So here's your crop report from Australia, and I'll show you the written part here. The most important thing is wheat production increased by 23% to 31.9. So that could put some pressure on the wheat market, especially as this is coming off and they're one of the major exporters. Barley increased by 8% as well. So if we're hoping that our malt barley program is going to have some pressure, but I think a lot of these things are known. Even the canola side, it's forecast to fall by 8% to 5.6. There were some reports saying it was 5.5. Now it's 5.6. Not a huge deal. And then you got lentils falling by 29% and chickpea to increase 284%, which with these small crops getting produced in some of the same areas as in Canada, it's all putting pressure on those smaller markets, of course. So just here's the numbers of the most important ones that I see is the canola, and then you get your barley, and then you get your wheat production. So let's get into the market. Canola is up 9, 8.5. European rapeseed's up 10 to 9. Soybean oil is up 3/4 of a penny. Palm oil is up 133 ringgit, up to 52. 5,212 as it's trading as the moment that I'm looking at it. Crude oil's up 90 cents a barrel. Soybeans up 7.25 cents, and then your wheats are a little bit mixed depending on which months you're talking about. Some are up and some are down. I think it's got enough pressure on it, and the Canadian dollar is just basically flat. Sorry about that. So canola, you can see that we've got a little bit of 4 days up here. It looks like we've got building a little bit of support, and here I'm going to show you my messy slide. I'm just looking at a bull call, buying a call, bull call spread, and selling a put below. So here's your put sell. So if you were to buy 615, sell 700, and again, these are not quoted values. You have to contact a broker, but you're looking at something like this for 510. So if you were to do all of this position, you would buy the 3460, sell the 1260, so you would have an $85 upside, and then sell the 550 below the market. And if you recall from the previous slide, 550 is even below where the market actually currently had traded its lows before. So you're looking at a potential profit of $79 if you were to do something like this. So let's just move on. Here's your rapeseed. The same 4 days trading up, but you're getting close to this 50% retracement value, and yeah, it's just a nice little recovery from where we've been. So if we look at the differential of rapeseed to canola, we're $184 per metric ton, and again, this is trading currency, so some of this gets skewed as we get a little bit closer to the close of the days here as well. But $183 more. Canola is too cheap versus the rapeseed in Canadian dollars. So you look at soybean oil, back to the 2023 retracement, want to get above those moving averages. So you need to get above that 42 cents and stick above there to get across the 10-day and the 100-day moving averages. Here we are with the palm oil making new highs as we speak here. So you see the snapback and trading above the 5,000 ringgit, which I think is a significant area for palm oil to be trading, and obviously getting more and more expensive versus other oils. So that does create a problem. But hey, as I stated in the earlier slides, there is a few things that get quoted around the palm oil as it's the largest traded veg oil or in the veg oil complex. The crude oil going in this upward wedge, now trading right in the middle of the wedge. Soybeans trading right at the bottom of the range, and you could probably, that is not a good scenario there. It needs to break out above that line to be supportive. The Canadian dollar, it actually looks like soybean. It's in that same kind of trend, trading close to the bottom. Now, are we going to break through or go up? No, I'm sitting here and I'm not certain how to trade this one. I would like to think that it's going to go back up a little bit. That would mean the Canadian economy is going to improve. Here's just a quick radar of the U.S. I'm right about here and getting snow as we speak. And here's your just a global 10-day moisture forecast, and you can see that they're starting to get a little bit dry in that area. But if we look back at the soil moistures and the NBDI that the some have talked about, that is not necessarily a problem just as of yet. But hey, keep a note if that continues or lingers, you could be shaving off that crop. But right now, they are not taking any yield away from that crop at all. If anything, it's going up in yield. There's some private reporters saying it's bigger yield. So let's get into the wheat, and there's no really good story here either. It's a downward ascending, trying to trade right at it. It's green today. If we can get some targets in areas, so if we get farther east, we can possibly get some $8 targets, and if we get farther northwest where I live and into Saskatchewan, if we get 760, that would be a good target to get, especially if we can get it moved between now and middle of January to get some cash flow needs met, and because we're going to be sitting idle over here for wheat movement in the most part until we get to into the last part of March or beginning of April. So here we are with Chicago wheat, same kind of trend, uh, downward trend, trading close to the bottom. Same thing with your hard red winter. We're making newer lows yesterday, so we have to move that chart around. And yet the milling wheat is actually still choppy sideways, trying to get some support right there. And like to see this market get a little bit more recovery here. I was talking to Kyle Sinclair, and he was talking about Egypt having some tendering issues, and I'm yet to find the article, so I'll maybe talk about that tomorrow. Corn, here's your upward wedge, but it needs to break out of that to be continue to be upward as well. So we'll see if that comes about. So we've got a couple days before we get to the stats can, and then next week will be the USDA, and that's all I have for you today.